This is the Definitely Uncertain podcast, brought to you by Goldrock Capital. Each week, we look at how high net worth families can improve their lives, decisions, and investments in a deeply uncertain world. We always aim to provide practical information, even if we can't offer specific investment advice.
Welcome to the Definitely Uncertain podcast by Goldrock. My name is David Ram. I'm a partner at Goldrock, the more than 20-year-old multifamily office servicing high net worth investors in Israel and around the world. And with me today is Carlos Zucchi, partner and CEO at Argis, an investment and management company based in Madrid, focused on development and value-add real estate in Spain. Welcome, Carlos.
Thank you, David. It's a pleasure.
Thanks for joining. Maybe to kickstart, you can just briefly give us your background, journey, and how you ended up focusing on Spanish real estate.
Sure. So as you know, just said, my name is Carlos Zucchi. I'm originally from Argentina. My background is in finance, business and finance. I also did an MBA in London Business School. And after my education, my whole career focused on private equity and asset management. And over the last 10 years, I've been focusing on Spanish real estate market. Together with Alejandro Schubach, my partner, we started Argis 10 years ago, just coming out of the financial crisis.
Mm-hmm.
And I think we had a terrific 10 years with a market that was first in recovery and now going into complete acceleration phase. We at Argis, we are an asset management company, structuring investors and LPs into closed-end funds, focusing on real estate, especially in the living sector. But we're also integrated with a developer that works exclusively for our capital to add value to all the projects that we execute, and with an operator for those projects in which we decide to do a build-to-rent strategy and manage those assets until exit. We are about 40 people here in Spain across all these three categories of businesses. And yeah, we're managing a little bit south of 1 billion euros in assets.
Amazing. Amazing. So from a high level, I want to get started from a macro perspective for a second, because a lot of the high net worth investors today are looking for ways to diversify their portfolios out of US dollar denominated assets and looking at other ways that they can make money. The US as a destination for capital has been very strong for many years, and people are looking for more diversified opportunities. So that's why I'm really excited to talk to you about this, about Argis today. But before we get invested in a country, we always think about jurisdictional risks or jurisdictional things to consider. So when looking at Spain as a region, obviously it's a big country. There are different aspects within Spain. There's the Madrid area, there's the Barcelona area, etc. What key jurisdictional or regional risks should an investor think about before investing in Spain?
Sure. First of all, I think we have to think of Spain being part of the European Union. That means, although there is a government that now makes a lot of announcements, and it caters a certain part of the population with those announcements, Spain as a whole cannot move a lot outside the boundaries of the European Union legal framework. Secondly, at Argis, we have been focusing a lot in the regions that are more business friendly. The same as the situation in the US, where you have states, and those states have a lot of autonomy to regulate a lot of business aspects and taxation. The same happens in Spain, where you have comunidades autónomas, which are the really like a province or region, that is governed by a political party that may or may not be the same political party as the central government. And those comunidades autónomas has a lot of autonomy, and they can decide where to apply a certain laws that are other federal government issue, and they can give exemptions on tax at the tax level. So in that sense, the Comunidad de Madrid, which is really the central, the biggest business region in Spain at the moment, is very business friendly, and it's been opposing a lot of the measures that tackle certain freedom at the business. And there are other regions like Andalusia, which is in the south part of Madrid, where you have Malaga or Sevilla as the biggest cities, or even the Basque Country, Bilbao, a city where we invested in the past as well. Valencia, which is another region, very business friendly. So there are 3 or 4 locations or cities or regions where we feel very comfortable of investing. And on the other opposite side, maybe Catalonia is, I'd say, the biggest risk. Where
that's where Barcelona is, right?
Yeah, exactly. Where the capital is Barcelona. I think that could be the complete opposite of where we are investing at the moment. So that gives you some protection. Of course, as well, you have to pick the asset classes that are more in line with what the authorities want, because in the past we have been invested a lot in Airbnbs or tourist apartments, which are residential apartments turned into a commercial activity. And that has worked in the past, but now the situation is that because there is such a shortage of housing, the authorities, even the most business friendly, are trying to limit the amount of tourist apartments just to have the supply of residential in the cities going back to the residential use. And we at Argis anticipated that, and we are now only investing in apart hotels which are in tertiary use or conversions from offices, which don't take from the residential stock. Actually, they contribute because they are bringing stock from office market, which is now oversupplied, into beds under the commercial law, which is more in line with what the authorities want. So I think it's a combination of choosing the location right and also the activity or the asset class that goes in line with what the authorities want and the society as a whole can benefit from.
So let's dig in a little bit to the demographic issue in Spain that you kind of alluded to, because as far as I can tell from the data, last 3 years or so, household formation in Spain has been roughly twice the rate of new build licenses for residential, creating a pretty significant supply gap, which creates problems around pricing as well. So there's an opportunity and there's also some aspect of challenge. Let's focus on the opportunity side first. So talk to me about those demographic trends a little bit, what you're seeing in Spain, in particular in the Madrid region, and how that affects policy or how that affects companies like yourself and what you're doing to capitalize on it.
Yeah, I think just to answer that question, let me go back to the past a little bit, to the residential housing crisis that happened in 2008 and continued up until 2012. So in Spain, and just to contrast with the current situation, which is completely different, in that part of the history, there has been a lot of artificially stimulated investment and artificially stimulated demand. Basically, the household formation at that point was more or less about where we are now, right now, 200,000 per year, but the supply was building at a rate of 600,000 houses per year. So almost 3 times the demand. Both the demand and the supply were artificial. Why? Because in the demand side, the banks would give individuals loans of 110% of the houses they're buying. So they would put zero equity to buy houses. So essentially, people can buy 2 or 3 houses with it, as an option free without putting any equity, and that created that artificial demand. And on the supply, developers as well could build with zero equity or minimum like 5% or less, and that created as well a free option for developers to build and charge fees as well. So it was a complete mess that created at the end, when the bubble burst, a situation where Spain had a lot of stock of houses and demand fell very quickly. So from 2012 up until 2018, 2020, the situation improved gradually. And after COVID, the demand side exploded. Why? Because there has been a lot of migration patterns that benefited Spain versus other cities in Europe and in the world. What are those? Basically, migration from Latin America. We are receiving. Spain has a huge benefit because it has a large base of 400 million people living in Latin America that at some point consider migrating to Spain temporarily or permanently, just because they speak the same language, they can integrate very easily, and they have more or less kind of the same religions. So they can come here and integrate very easily. So that's one of the drivers of the demand. The other driver is immigration within Europe, just because working from home made it possible for people from France, from all over Europe, UK as well, to come here and work part of the year or the entire year from here, which has a lower living cost and better quality of life in general. And then migration from other parts of Spain to large urban centers like Madrid as well.
Right.
That's the third driver. So going back to the history lesson, we had demand picking up because of these 3 factors, and the demand ate through the stock up until 2020. From 2020 on, construction picked up a little bit, but it has a cap because over the past 10 years, there has been no investment in developing new land. So converting countryside land to urban land, it's a lengthy process here. Unfortunately, it takes 10 to 15 years.
Wow. So regulation red tape, basically, even in the Madrid region, is a bit long. It sounds like. Okay.
Yeah, it's long. It's not only regulation; it's as well because a lot of owners have to come together. They have to form some sort of society among them, pay a lot of fees. The project and planning, it's complex, takes time, and then financing it also very expensive. All has to be done at the private level, and then when that takes creates this funnel. So no investment in this conversion, so made that created a situation whereas from 2020 on, developers want to build very quickly, but they are limited because the amount of land is very limited. So we are now in a situation where we are building at a country level 80,000 houses per year, or maybe 100,000 houses per year,
right?
And the demand is double that. So the accumulation of that deficit up until 2025 is 600,000 houses. So that's creating this tension where prices for new builds are growing every year around 10%, and the rental prices are also growing more or less at the same time.
So how is the government responding to that? Because I know that there was, in late 2024, there were tens of thousands of people in Madrid protesting the soaring rents, for example, that's obviously caused by that gap that you just outlined relating to new housing starts versus household formation. So you have this tenant risk, union action, and stop eviction movements, and government has to respond to those populist demands. So how is the government responding to ensure that the supply matches demand?
Yeah, no, of course. I think there are two schools. One is the carrot, and the other one is the stick. I would say in Catalonia they implemented the stick, which is basically limiting rental prices going up.
That's right.
And that completely destroyed the rental market. It doesn't work. It didn't work in my home country in Argentina, and it's not going to work here. So other regions avoided completely to implement those measures. The measures were issued by a law at the national level, at federal level, but then each region has to implement it within its city. And non-region in Spain outside Catalonia has implemented those measurements. So that gives you a sense where, although Catalonia did implement it, the other cities and regions in Spain didn't want to do that. The way they did, they are doing measures that maybe are not going into the the newspapers, but for instance, they make it more easy for you to get a license, the construction license. So the process used to be more complex. Now they created these private entities that work with the government just to outsource all the analysis of the projects before the government approves them. Also, at the end of the construction, you used to need to wait for the license approval. Now you just have to do a search certification, and the city has some time to check it or not. So they made all these flexibilities for developers to make it easier. They also are improving conditions for banks to give financing to individuals, so that makes it more affordable. And I would say on the rental market, they are now pressing the illegal Airbnb situation, which wasn't wasn't addressed in the past, and it makes sense to address because that mom and pops renting through Airbnb wasn't really controlled, and now they are asking actually the platforms to ask for a license, which makes sense.
Makes sense.
So that could benefit the commercial activity on apart hotels like the ones that we're building, or typical hotels as well. So I guess that's it, and they continue to think of other measures that really encourage construction or encourage the new developments to come to the market quickly or quicker than before. I think that the measurements that are going to be implemented in the future are probably going to be around adding more flexibility to the licensing, or more flexibility to that those 10 to 15 years to build new land as well. So
one of the things you mentioned as well just a moment ago around how the government is helping is trying to encourage financing from the banks, which is another major indicator typically in a country about how healthy a real estate market can be, is how healthy the bank financing market is. And obviously, as you described, since the financial crisis of 2008, as far as I recall, the banks in Spain basically just shut off for a while. And now it seems to be much stronger and coming back into the market in a more strong way. Can you describe what the situation today is around bank financing and how you see that moving forward as well?
Yeah, of course. Bank financing after the crisis, financing on real estate projects, European Central Bank asked the banks to make huge provisions for those loans, so that made them bad business for the banks. But I think because this situation is now much healthier, in which you're not financing individuals. Individuals have to come up with 20 to 30% of the acquisition price of equity now, and that's very strict. It will be impossible to get 100% financing, so that demand is much more healthy. The the monthly payments for those mortgages are below the rental prices, so they're still accretive for someone to buy a house because they would pay less per month, and of course part of that payment is actually saving because you're amortizing the loan. So it really, the affordability for those mortgages is very, very healthy. And then development for developers or new projects, it has halted, but now it's very top priority for banks to finance residential housing. I think because it's a government priority, as I mentioned before, and also because it's really good business. Once you had the pre-sales of 30-40%, the risk is zero, really, because the construction companies deliver on time. The developers have very healthy balance sheets, and they have the pre-sales, and the market as a whole is very, very attractive.
Are the banks active both in the build to sale, like you just described, and also the build to rent market as well?
Yes. Basically, in the build to sell, they kill each other to get a deal.
Makes sense.
We are developers in the market, and they compete, and they are very, very, I can give you some numbers. So we have offers for a new development, kind of middle class or high end class in a very wealthy area, which is zero risk for the banks, and they are giving us options or alternatives proposals to give financing at Euribor plus 200 basis points. So that's a total cost of less than 4 for a development.
And what kind of loan to value ratios are you seeing from the banks as well?
Yeah, they're very attractive. They also improved that, and considering pre-sales, those loan to cost is around 70-75%. Loan to value is less than that, probably maybe around 50, considering the profits. So I think in general that situation is very well. On the build to rent market, they are entering right now. So they are making very attractive proposals as well. They do have more risk there because the commercialization is still pending. You don't have pre-sales on build to rent, and they have the construction risk. So they have two risks there. So it's a little bit more expensive, but the market is there. And you also have, they are also competing with alternative financing as well. So a lot of debt funds participating in the market, kind of as it happens in the US now, it's happening in Europe. It's a very, very competitive market. You can get impressive loan to cost conditions and prices or costs, that are very affordable for the project.
So basically, like, banks can provide the most of it, and maybe you can go to an alternative lender, a non-bank lender, for maybe a bit more to increase the loan to cost ratio.
Yeah, correct. And because that market grew so much, banks kind of woke up and said, "Hey, we're losing this opportunity to these guys," and we have the lowest cost of capital, so we have to wake up and not avoid them to eat part of the cake. That's kind of the situation.
So another topic that affects real estate quite substantially on a global scale, and I want to find out what's happening in Spain specifically, relates to inflation. So as far as I can tell, in the European market, cost index for building has reached all-time highs recently. Supply chain is challenging around steel, concrete, etc. Labor inflation, I'm not so sure what's happening in Spain, but I'd love to understand what's happening in Spain on the labor markets, because obviously a lot of immigration, which may help. So how do you guys think about inflated costs for your development projects, and how does that relate to, from a potential buyer of an apartment thinking about buying a brand new apartment versus maybe a bit of an older apartment? Does that affect their purchase decisions? How does that all work in your business?
Yeah, sure. So inflation was, as you mentioned, a problem when we had the Ukraine war started in 2022, and inflation, as was a global issue back then. Luckily, the rates increases were effective here in Europe very quick. We had like a very sharp drop in inflation in a few months. I'd say less than a year. Inflation was under control.
Right.
I'd say Spain particularly was very well positioned. Why? Because you may not know this, but of the electric grid, 70% is non-dependent on fuel or on fossil fuel alternatives. It's 50% is renewable, solar and wind and hydro, and 20% is nuclear. So that you create a situation where increases in oil prices did not affect as much Spain as the rest of the European Union. On another level, after the war, gas supply changed from coming from a pipe from Russia to coming through ships from the US and other regions of the world.
Right.
And another lucky situation was that Spain has the biggest capacity in LNG regasification of all Europe. It's like double France capacity and almost triple Germany's capacity. So
liquefied natural gas, which they can import from
correct.
the US.
All the gas, Spain became kind of the gateway for the gas importing for all Europe. That made it cheaper for Spain to achieve to have that gas, and that really contained the increases in cost for industries here because gas prices increase. Liquefied natural gas is more expensive, but the impact was much softer here than in the rest of Europe. So Spain kind of navigated that situation of inflation very, very well. Now the situation is, I would say, we are always tendering construction projects, going back to the business that we're doing.
Yeah.
And prices have been stable for the last 2 years, with the fact that there is a lot of competition for labor. So labor is becoming kind of the bottleneck for construction companies. So we're focusing on the biggest construction companies that can, have the muscle to attract and secure that labor for sure. And I would say the smaller projects, which they have to hire a small construction company, those are suffering a lot, delays, just because there is a shortage of labor.
Interesting.
I would say
immigration that's obviously quite popular in Europe today. Yeah. That's not helping with the labor market at all.
Yeah, I think definitely helped. Without immigration, that would be a huge problem, and now it's just something that companies are struggling with, but it's not a problem that stopped construction. So yeah, it definitely helps on that front. I think as a whole, now inflation is not on the radar of decision making here. I think you mentioned you made a part of the question was why would someone buy something new or used in terms of house?
Right. It doesn't change the price dynamics if there's inflation.
Yeah. Now there is quite a premium in new build versus old stock in this market. Yeah. And I think the reason is because there is some financing element when you buy a new house here, because you only have to put 10% down. Let's say you want to buy a $500,000 apartment, you have to come up with 50K now down, and that secures the price, because when we do pre-sales, we secure the price for that buyer for 2 or 2.5 years until we deliver the unit. And then the other 10%, reaching up to 20, that they have to come up with equity, they can do it in installment during construction. So there is an element of financing, and with 50K or 10% of the whole price, I can secure my home. It will be delivered in 2.5 years or 3 years, but the price is fixed. So that's why there is a premium now when you buy new build. And the other reason is because when you buy a used apartment, you do have to do a lot of refurbishment, and that's money that usually the banks don't give you financing. You have to come up with the 20% to buy. Let's say instead of paying me half a million, it's 400K. So you still have to come up with 80,000 euros for the down payment, plus maybe 50 for the refurbishment. So that makes it more expensive on an upfront cash payment.
Yeah, those are serious incentives for new build. Absolutely. So
Correct.
so we spoke about jurisdiction, regulation, bank financing, inflation, supply and demand, all these important things. And Spain sounds like a really interesting place, in particular around residential markets. Maybe for a final question, just thinking about 5 years out, maybe you could think about a bold prediction that you can make about Madrid residential real estate,
right,
or anything in the real estate market in Spain, that you would predict that would surprise a listener.
Yeah, sure. No, I think Spain is kind of has been kind of the unknown part of Europe for many years, and now it has become the primary target for European real estate funds or even global funds coming to Europe. And I think it has there are strong reasons for that, which I truly believe. It's not because I'm in this market. It's just that it is quite obvious once you're here and you start talking to people in the market. So after COVID, Spain was blessed with the gods blessed Spain with being the most competitive market in the world for tourism. And tourism changed from being a luxury or optional item in the 35 to in the 35 to 45 to being a must. So all young or middle-aged people now think of tourism or traveling as kind of a vital part of their life. And that change, which COVID accelerated, improved Spain dramatically. Just to give you some numbers, we had like 80 million tourists in 2020, and now we're 100 million. So 20 more million tourists.
Wow, 25% increase. Wow.
In only 5 years. And Spain has the infrastructure which was acquired when Spain joined the European Union. The European Union spent like ridiculous amount of money in infrastructure. We have better highways than Germany, and nobody understands this. But it is very important. We have high-speed trains to most of the important cities. I can be in 2 hours in Malaga. I can be in 2 hours in Barcelona. Yesterday, I went to Seville for the day and came back in 2 hours as well. So those high-speed trains are critical infrastructure. So the market, the country, it's like it has been preparing for this for 20 years, and now it is its time. The GDP growth in 2024 was 3.2%, if I know, which is 3 times the average of the European Union. This year we're going to grow at 2.5%, still one of the highest GDP growth in the world, and that consolidates the local demand and brings a very large amount of immigrants and investors to this market from all around the world. So I think we are the ones in a lifetime opportunity in this market, which you can take advantage from, investing in residential, tourist assets, even offices are coming back. Office investment is coming back. At Argis, we specialize in living, and we are doing development for B2 rent, and with strategies that are very focused. Like in our recent fund, we have 5 deals secure, and all the 5 deals are conversions from office to living. And that's another trend we didn't touch upon in this call, but it is obvious play, because we do have an oversupply office market, and we have such a shortage of supply in the residential market.
And a 10 to 15-year timeline to move land that's available into zoning
correct.
for residential. So obviously, if you have commercial, you can flip it much faster.
This huge bottleneck in new supply, we're kind of trading or arbitraging office which are compatible with residential. We don't take zoning risks. We only buy office buildings which already are residential, so direct license, and we turn it into residential stock. And so that those are opportunities in this market. And just to give a conclusion, I'd say that between now and the next 5 years, I anticipate that the market will continue to grow. Prices will continue to grow between 5 and 10% per year on a residential market. Our rental prices as well, even more probably. The only thing that could stop all of this is like a black swan and have an increase in unemployment, which really, we've been through COVID, we've been through Ukraine war, and all those huge crises didn't affect the market. We have been selling units for 10 years, and whenever we faced those crises, we thought, now demand is going to stop. And no, it was the opposite, because when people feel scared, they buy real estate. And particularly in Spain, that's kind of the culture. It's the same as in Latin America. People don't buy bonds or stocks. They save in bricks. They save in real estate.
Really interesting.
That really provides a situation where in the good markets, you do have a lot of demand because of the newcomers. And in the bad markets, you have a lot of demand because of the local population wanting to secure their home or secure their wealth into real estate.
Fantastic. Really, really interesting, Carlos. Thank you so much for your insights and your experience in what's going on in Spain in the residential real estate market. And thanks everyone for joining us as well. And we'll see you next time. Good to see you.
Good to see you as well. Thank you. Bye.